Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 19th of June. We've got a slightly edging risk positive outlook today. Nothing too decisive, I might add. And the only real movers that we're seeing through markets at the moment are the oil price, which is again continuing its run higher. It had a bit of a consolidation through the week, but has since broken out and is now sort of eyeing a test of that 43.40 level of resistance on Brent crude, but also the European indices as well, about 1% higher across the board. Nothing too decisive though, because I think you look at these forex markets, they're pretty flat, aren't they? Not doing a great deal at all. Little shade of risk positive helping the Aussie dollar today, but aside from that, not a huge amount. There is again a reflection of mild risk positive through a little tick higher on treasury yields, but essentially, yeah, these US markets were fairly flat in recent days. Little tick higher on the futures today for the US, but yeah, nothing really decisive as of yet. And it'll be interesting to see if once more the little edge higher just turns into a dissipating rally and rolls over again. So just watch out for that today. Now, what we have is a bit of data today. We had the UK retail sales out this morning, 7 o'clock this morning, UK retail sales, and that retail sales number, those data came in much better than expected actually. These retail sales numbers, ex-fuel 10.2% actually up on the month of May, well above the 4.5%. That has helped to claw back some of the big decline on the year-on-year data back to about 10%, but still better than expected data there. And the question would be what data does for the UK pound sterling at the moment, because obviously we had that announcement from the Bank of England that it was going to be effectively tapering off its asset purchases, even though it had increased the stock amount. Market initially took it positively, but then sold into it because obviously it is effectively less supportive for the UK economy. So how that retail sales numbers play into that, you've got sterling actually underperforming slightly today. Now, looking further into the afternoon, we've got the US current account numbers expected to come in at 103 negative on a deficit of 103 billion. If that's below 100 billion, maybe you start to see a bit of dollar support coming in. But yeah, we've got also watch out for quadruple witching, I should say, today, where indices of futures and options expire, and yeah, the impact of that could be volatility really this throughout the day. So watch out for that today. So that takes me on to my chart of the day, which is the German DAX index. Now, DAX has sort of rallied and gapped higher actually at the beginning of the week. Now, the question would be, is this gap higher going to be regenerating the upside impetus again? Now, the annoying thing is that this chart, for some reason, is only showing a tick on yesterday's session, when actually that was a bearish key one-day reversal. And you can see that the market moved to fill this gap at 12,470, but didn't close it. So that's a concern. So this move today needs to close that gap. Otherwise, we start to see this rolling over effect of the near-term outlook, and that could start to weigh on the market once more. Initially, obviously, we're trading higher on the DAX, about 1% up on the day. Needs to close above 12,470 to really sort of put that gap to bed, and then we can start to think about the highs again. But that gap is really important, I think, in my opinion, because look at these momentum indicators, not doing a great deal, really. Little edge higher on stochastics, but that is the emphasis on the word edge rather than sort of decisive. And you need to see that move decisively going higher, I think, to really be having better conviction in a bull move again. Because there are certainly question marks surrounding how these risk recoveries are performing. In terms of support in the DAX, you do have this hourly chart which shows initial support coming in at 12,150 area, and then a little bit higher at 12,190. But essentially, in the last few sessions, it's actually ranging sideways. So it does need to break out to really put that to bed and then start to think about the upside moves again. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars and also click to watch our Trader Talks videos to gain some top trading ideas.